Hello guys, this is Carson. So on this video, I want to quickly break down one of the trade we took last week on Cadchf. There was a sell setup. This was the how the trade played out. You can see it here. And on this Cadchf setup, it was taken from the 4 hours time frame. I also called the trade publicly for my students to take. This was when I called the trade for them to take. And this was when the trade hit final target. So what was the idea behind this trade? Simple, as easy as ABC. So we had a break of structure here, which was this. To the downside, we had this lower low, lower high, lower low. Then the next thing we had a break of structure to the upside. Here, you can see it. Then something happened, but I know it's kind of, you can't really see it. We had a break here. Look at this break here. We had a break here, which means if there was a break, there is a high here. This trading view, I don't know, most of this trading view, they don't show it. So we had this. So this high was taken away by this guy, which is the what? Protected what? Protected high. And we had another break of structure to the downside, showing fully change of character from uptrend to downtrend. Then we had what? Another break of structure. And this guy was what? Our liquidity. This guy was our liquidity, as simple as that. This guy here was our liquidity. And where price reversed from was what? Our take profit. So on this trade, Cadchf comes with a big spread. The spread of Cadchf is very big. So what I did was to avoid being taken away by spread before the real move. I had to to protect everything here. I took my stop loss above this guy here. This trade was almost about 1:3 RR. Yes, it was almost about 1:3 RR. So let's quickly break down on the trade. So simple thing, just like I told you guys, my entry model, which is this. I want to see price take out a high, do this, and give me a liquidity or inducement, as people may call it, whatever one that is okay by you. This is what I use for my entry. It's just for entry. It doesn't change the directional bias. But first of all, before you see this, you need to understand what is the directional bias of that particular pair you want to take. So coming to the 4 hours, that was what we had here. This high was taken away by this protected high, and we had we had this guy, which was our liquidity. Now let's scale down to our bias time frame. So on the 4 hours, I use monthly, weekly, and daily as my bias time frame. So this is already a new month. This was the candle where we took the trade from. You understand? This candle that is pumping up now is just a new month. So before this candle closed on Friday, because the trade hit take profit on Friday, it sold. Now, if you look at Cadchf, you could see that Cadchf is bearish. You understand? It's bearish. Do you get? But then again, price has taken away this low here on the monthly time frame. I told you that trade came from this candlestick that closed, that is signaling buy now currently, because this candlestick is signaling buy on Cadchf. So before this candlestick closed on Friday, it pumped, it sold before it closed this way. So coming to the weekly time frame, let's see. On the monthly time frame, price has taken away that low. So which means I'm not meant to I'm not meant to take that sell. But as you check when you trade. Now let's go back to the monthly time frame. When this candle closed for last 2 months, this candle was signaling sell. And that was why last month, which is February, sold. This is March now. This green candle is the March. So when this candle closed, signaled sell, even though it has taken away this low. So buyers, there is no sign of weakness for sellers. So buyers has not taken any charge, even though it has taken away this load. So what did I did? I came to the weekly time frame, and on the weekly time frame, I saw that price. On the weekly time frame, you could see that price is bearish without even marking out anything. There was a break of structure here, and there was another break of structure here. Okay, and we have this break of structure here. Let me make sure this is actually recording. Okay, good. Now, price came, tapped on this look at this fair value gap, FVG here, this imbalance here. We have this 1, 2, 3, tapped on it and started reacting. And this was where my sell happened. This was where I took my sell here. You understand? This was where I took my sell. So I capitalized on this fair value gap that price tapped on, and on the weekly time frame. Now came down to the daily time frame. On the daily time frame, price was creating some internal structure. You can see we had we had a break here, and we had another break here, and we had another break here. And now, before this guy was taken away, before this break happened, before this particular break you're seeing here happened, you understand, I've not taken the trade. This was where I took the trade. So what did I do? It's very simple. I used this guy here as a supply. This was my supply. And on this supply on the daily time frame, that was where my structure formed. You understand? Yes, this is an internal internal structure, but yeah, you can still trade internal structure if you know what you're doing. You understand? Especially if you see it meet your confluence, you understand, with everything. So I used this guy as my supply, and on this supply, price gave me my entry model. So which is why on the 4 hours I came, capitalized on this, and boom, sold. You can see this was when the trade hit take profit. You can see it here. You can see everything here. So that was how we were able to close out this trade in massive profit. So if you like content like this and you would like to see more content like this, all you need to do is follow us on Instagram, Trade with Cassie. We're also on TikTok, Trade with Cassie. And you can subscribe to our YouTube channel, Trade with Cassie. Thanks for watching. God bless you.